Support and resistances. What are they and how to trade with them, and why do traders love them so much? Hi, my name is Vladimir Rybakov from Traders Academy Club. In this video I would like to cover two of the most favorite analysis ways of traders. The support and resistances, and the dynamic support resistances are among the favorite technical analysis methods among traders. So it's very important you know how to use with that correct. Mainly understand the logic behind them. What are they for? What do they represent? And how to rely on them correctly. So before we start, little basis, the little fundamentals about the so-called support and resistances. These levels are the levels that traders expect the price to stop at and reverse from. Support represents a growing demand for a cheap price. Think about it logically. When the price drops, and then up, it finds some level, and this level holds and fights back. The level is cheap. The price is cheap and comfortable for the buyers, and the demand is growing and growing accordingly. At some level, the demand is so high for a cheap price, boom, the buyers get the control from the sellers and make the price bounce upside. While the resistance is exactly the opposite. The price goes higher and higher and higher, reaches some level which is too expensive for traders to hold or to buy more, so they let it go. We call it a sell-off in specific level under specific conditions, and the price drops. So these levels are the levels where traders expect their turnarounds to happen from. A zone that holds the price below is called a resistance, and a zone that holds the price above is called the support. As you can see here, this area holds, just draw it here for you, right? This area is a resistance, and it holds the price all this place below the level. This is what resistance represents, and the support is vice versa. It holds all this zone and higher above the zone, right? Which means every single time you get closer, the demand gets higher, the buyers show more interest as the price getting cheap, and if the conditions become really good, both technically, fundamentally, and so on, we can assume there will be a reaction and a possible buy to happen. It sounds amazing, right? It sounds very easy. Many traders go and say, oh, so it's so easy to trade with that, and they do few common mistakes, which I will want to talk about soon. So keep watching. I'll go and cover that very, very soon. And then I'll show you how I love to use support and resistances, when and where exactly, and what's my personal preferred favorite. Favorite style. Now, support could turn to be a resistance, and resistance could turn to be a support. How does that happen? In a downtrend, right, where the buyers hold this level, they resist, so the price do not go further than that. At this moment, the sellers basically show their main interest, right? Why? Because the price is dropping. The buyers try to take the control, show their attempt, but the sellers say, give it back. Give that back. The price is convenient. I want to continue and hold my sells. So you can see here on that situation, a sell-off happens, the buyers get there, and the sellers say, oh, game over, give it back to me, and the buyers go completely with a sell-off here, sell all they have, and the resistance holds, and the price pushes lower from there. At some moment, and some point, because of this or other conditions from the market. There are events happening in the market. There are things happening in the market that cause a trend change in times. And once this level is broken, it starts to use as the support because the buyers get the control. Now they will try to protect it. How do they protect it? Every single time it goes there, they say, now it's cheap again, let's buy. And then they buy and buy more. And if you take a look on that inverted, it's also a sell-off situation, right? For those who was selling. So they have to get rid of their holdings. So a resistance that is broken is called becomes a support, and support that is broken becomes a resistance. Now, how to spot support and resistance zone? Basically, pretty simple. You go zoom out, and what you want to see is, and listen carefully, is an appearance where a zone, not a specific level. That's where traders fail. They think support is a level and resistance is a level. It could be, let's say this is Euro Aussie, so 162.13 could be a specific level. No, it can't. Mr. Market is never, sorry, Mr. Perfect. You cannot expect from it to bounce over and over again from specific price. It's impossible. Okay, so the way I love to describe it is you cannot expect for perfection from not a perfect organism or market conditions. So that's pretty much very important to understand. It's never a price, it's more like a zone of levels. So what do you want to see? You want to zoom out, and you do want to see where the price was holding for a few times. The more it did, the stronger the value of this level, the better the chances there will be reaction from. You can see how many times it resisted here. Now again, not one time appearance, but several times appearance. Okay, support, support, then broken, resistance. Right here it spiked again, and again. This level has a value. It's also a round number, which we will talk about soon, next to 156. That's next to come. So you can go back and you see here how many times, right, the prices were there fighting and holding the levels. These levels have value. Now it doesn't mean necessarily when we reach there magic will happen. No, but these levels are levels you do want to pay attention to for possible trade to happen. How to use them correctly, I'll explain very, very, very soon. So this is how you spot them. You zoom out and you find them. Very important thing to do is to remember that, and this is a very important tip here, support and resistances become stronger when you see several candles around this area, around this zone, around this price zone, several candles fighting and fighting over. So not just one spike. One spike means nothing. But you want to see a fight over the area, like you see here. Many candles around the same zone, right? Also here and here. Then it came with one spike, yes, but the zone was created after a real fight. Several candles, several candles, several candles, and so on, right? Now the next one is mainly a spike, but you can see how many candles it took to create it, right? Several candles, and so on and so on. So you don't want, if that would be just one-time appearance, you don't want to use that. If that's if that happens again after a fight and the initial creation, good, we can go and work with that. Now, I mentioned before, support resistance, that's zone. It's never a specific level, and basically it could go and spike a bit through here and hit a bit more, right? It doesn't have to be exact price. Remember that, very, very important. As a rule of thumb, there is a agreement among the community of traders, not just for support resistances, for general deviation in terms of prices. 10%, 10-15%. So when you are checking how to create this zone, check the last trend. 10-15% of this movement you add up and down, and that's where you get yourself a zone. 10-15% of the previous move leading to this zone. Okay, so that's how you work with that. Remember, never a specific level. And support and resistance could also become dynamic, which means develop with the price, do not stay horizontal as we just saw. We call that trend lines. Now, the beautiful part of the dynamic support and resistance, it could be on the top of the prices, on the bottom of the prices, and the representation would be different. In an uptrend, when you have higher lows and higher highs, the dynamic support and dynamic support, which is below the price, right? Which the level that holds the price above it, right? So the price is above this zone. This would be dynamic support, because every single time we're coming closer, we assume the price might go and push further. And when you are in an uptrend, but you have your zone on the top, this is your dynamic resistance. This is where you expect a sell of a possible sell off of this instrument you are working with. It could be stock, forex, pairs, or any other instruments you work with, but you expect a reaction. You expect a sell off there. The buyers get rid of their holdings. So remember, that's very important. Support resistance could be dynamic. Again, never a specific level. It's more like a zone. And very important thing, round numbers, psychological levels. That could be pure round numbers like 114, 113, 112. These levels represents the higher time frames, and the middle numbers like 112.50, 113.50, like every the 50, right? Dot 50 would be the inner levels. They would be more adjustable for short-term trading, and that's where you would see more reaction. One of the most common approaches to use such levels is to find fake breakouts on them. So when the price comes and tries to break above or below a psychological level and fails, you would see normally a big reaction there. Again, it's not a rule of thumb, of course. Apply this to the other techniques, which I will talk about later, but generally this is what you will want to see, right? Ideally, fake breakouts around these levels. That's where it will have its extra value. Now, the other tip I will give you here in terms of support resistances in general, but especially with psychological level, is do not trust one shot move, which means boom, up or down. Go with moves that developed in few waves, in few lags. So when you are observing this as a false breakout, look how it developed: up, down, up, down, up again. 3 pushes to the upside. When you are checking this, you figure out up, down, up, right? When you are checking this area and the fake breakout here, look what happens here. Several pushes, right, through, not just one shot movement like here. This would represent not much. The next one would represent much more, because now it has 2 pushes to the same area. So one shot would basically mean not much for you. Few shots and fake breakouts would have a greater value to make your decision easier and better. So that's about the psychological levels. Now, if you are new to the channel, I would like to invite you to subscribe to our channel just below my picture. Click the button. Allow this ring after you subscribe to allow notifications every single time I upload a new video and a new work for you to the channel. And if you would like to share this video with your friends, you are more than welcome. This is open for the community completely, with the idea to help traders have better idea of this wonderful technical analysis tool. Also, I would like to invite you to join our completely free, no-cost Telegram channel. To do so, just follow the link in the description. This channel is where you can find articles, trading ideas, educational materials, videos, and many more great things, all for you, completely no cost, all for the community. So, what not to do? This is one of the most common mistake traders do. They find one-time shot, right? You see that? One-time spike and retrace, and they say the next time it's there, I'm gonna sell. This is a complete mistake. As we discussed before, one-time appearance means nothing. You want your resistance to build up, you want your or support, you want your levels to be proven, you want your levels to hold, and you don't want your level to be based on one candle or one spike or one time appearance, because it has no value. The fact that something happened and it was sell-off does not mean it would be a significant level for the future. So you do not want to rely on one-time appearance, spots, highs, resistances and supports. And also the same is said about the dynamic trend lines. When you see, oh wow, this is a trend line, the next time it's there, I'm gonna sell just like that. It might work. Most likely it will fail. And this is definitely not a strategy to rely on. You want to see a level holds, fight, retraces. I'll show you in a few how it's basically identified, and you don't want just by visiting the price to attack this trend line or dynamic support resistance. It might work, you might get lucky, but it's definitely not a strategy to work with. Now, very important thing here, it's of course correct for all the technical analysis in general, but also very important for support resistances and dynamic ones. That's the time frames. Make yourself a favor. Do not try to attempt to call a resistance or support on 5 minutes, 15 minutes, or even 1 hour chart. It means nothing. Levels, again, have to be created. Sell-offs and so on with real significant money do not happen on the short-term time frames. They happen on the higher time frames after real significant waves and trends. So do yourself a favor. Don't try to reinvent the reality and the trading logics. So many traders tried, so many traders failed. You don't want to do these mistakes. So avoid that. The higher your time frames you work with, or at least start to collect your data from, right? We call it multi-time frame. You start from higher, and you can go lower after that, but rely on the higher levels, and don't go with short-term time frames. Very important. Okay, so that's about it. And I also would like to invite you to continue and enjoy my completely free education for the community inside the newsletter. If you are not in yet, vladimirvekov.com, that's my blog, Forex newsletter. Again, you will find there a full series of educational videos and articles. Enjoy. And now to my trading strategy with the support and resistances. In this example, I'm showing a resistance. It is applied for support as well. As you might already notice from my previous videos, you know I'm a big fan of multi-time frames, because each time frame for me represents a separate money flow. Weekly represents long-term flow, daily shorter, 4 hours shorter, and so on. When I have multi-time frame telling me the same story, the same trading idea with different market phases, periods, and levels, I have much better chances to find a winner. And in the business of statistics, like trading is, it's all about timing. And it's all about improved odds. There will be no guarantee ever for a successful trade, ever. But your starting point for a trade could be improved big time. That's done by multi-time frames. Now, one of the best parts of the support and resistances and dynamic ones, they could be applied completely with any other trading methods and any other technical analysis methods you have and you know already, with Fibonacci's, retracements or expansions or any other tools you use. It could be done with candle patterns. Works amazingly with candle patterns there. It could be done also if you apply indicators to spot divergences like the MACD and, for example, the RSI. Next to my picture here, you would find these recommendations for the videos I created about these subjects. Now that's the beautiful part of supporting resistances. They are extra. They are not there. They could be used only for pure price action. Very good, but it's more advanced. For those who want the combinations, the multi confirmations, that's amazing. That could be applied with few. So how do I approach that? I start with higher time frames. It could be daily, it could be weekly. And again, I start to define my levels from there. So when I see a zone that and again, not one candle, but you can see many candles here fighting and creating the area. So when I am next to this zone, what I want to do is to drop lower to lower time frames, the next time frames. I'm checking the next leg, the last leg from the daily. It was like this, right? Remember what I told you? Make sure your level is coming in few pushes, few waves. And then you would want to see on the lower time frame also few pushes, holding, ideally spiking through. We call it a false breakout. And then we can drop to even one lower time frame. And there, what I love to see is the turnaround. Turnaround, I identify with two main principles: fake breakouts and lower lows, or the pure price action approach. And this is the definition of a trend. Now, next to my picture here, you would find a full webinar about this subject exactly. Make sure to watch it if you still didn't. And how do we approach that? Lower highs, like this. Lower highs, right? You can see here H1, H2, H3. They go lower. And lower lows, L1, L2, L3. This is a turnaround, possible, because now looking back, it's so easy, right? Everyone could be a genius by spotting back, but when you deal with that live, this is what you want to see, because that represents a possible turn around. The definition of a bearish trend, a beginning of a bearish trend or developing bearish trend, is lower highs, lower lows. So at the moment you found a bounce level, note it's also psychological levels here. It's surrounding around classical psychological zones, right? And when you see this level holds and the turnaround happens, you know that from this place you can basically look to sell your retraces. And here you can apply, as I said before, any of your technical knowledge: Fibonacci's retraces, corrections, moving average strategies, any other trading systems you have, or signals you use, or whatever it is. But when you define your direction you want to trade with, you improve. Listen carefully. You do not guarantee your profits, you improve your odds. Trading is not about warranties for profits. Trading is a business of statistics. And on the times you are right, you want to make more. Then you lose on the times you are wrong. This is a pure definition of successful growth in your performance and your capital. Don't aim to be right more times. You cannot change the market. It will never be care of how beautiful you drop your lines, right? You want to improve your odds to be right. You do that by multi-time frames. And you want to improve your performance, and you do that by keeping risk reward. Make more on times you are right than you lose on your times that you are wrong. Don't try to change this formula, because many traders think I have to be right more times to make more money. Complete nonsense. How can you be more right time? Do you think market will be care of how good is your knowledge or how beautiful you draw? Never. Never. The market will do what the market will want to do. If you can improve your odds, and you do that by multi-time frames combinations, and if you can keep a good risk reward there, that's how you improve your chances to do it the right way. Okay? So this is the support and resistance video. I hope it was helpful for you. I hope you learned some new things, or at least cleaned some of the previous possible doubts you had. And let me know what you think about it. If you enjoyed the video, if you enjoy my work, please show your support back. Hit the like button. Let me know in the comments what do you think about that. Let me know in the comments what are the other subjects you would like me to go and cover for you in my next educational videos. So thank you very much for watching. I invite you to join me in the live trading rooms on daily basis in Traders Academy Club. This is the link to follow. You can also go in the description and find it there. Thank you for your time. I hope you enjoyed the video, and I wish you wonderful trading and all the best. I'll see you soon.